So welcome everybody again. It's Stuart here from Hot Forex. Today we're going to be talking about algorithmic trading systems, what good systems look like, what bad systems look like, and putting it all together. And basically what I do, I'll go through my system in high, not in great detail, but in that high sort of definition, if you like, and so what I do on a daily basis and how it works out for me. So hopefully we'll have a good session today. So usual start. Any questions? Put them in the question box. Any issues you've got with GoToWebinar? Obviously, try restarting it. But before we get going, I need to read through our disclaimer, which says the material here is provided as a general marketing communication for information purposes and does not constitute independent investment research. Nothing in this communication contains or should be considered investment advice or indeed an investment recommendation or solicitation for the purpose of buying or selling of any financial instrument. All information provided here is gathered from reputable sources, and any information containing indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in Forex and CFD product is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk, for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. And finally, this communication must not be reproduced or further distributed without our prior written permission. Okay, so Omid, it's over, don't worry. Okay, so this is me. There's quite a few new names in here today, so let me just run through who I am and my background quickly for a minute or two. My name is obviously Stuart. I've worked in the City of London for over 20 years. I worked for investment banks and a retail bank. But more importantly for this, I've been trading and investing my own money since 1997, and I'll tell you a very short story about how I got started. It was quite significant for our family, and it was the kick up the bum that I needed to get going. I'd talked and worried about it for many years, but it was a key thing that happened, and I'll tell you that story today. But over those years, and it's 20 years now, it's probability. Do what's probable, keep it simple, look at multiple time frames, but most importantly is this final one here, know yourself. And if any of you here haven't watched the Mind Games webinar, I can't insist you watch it, but if you really want to understand how to get going in trading, or how to restart your trading career, or understand what's gone wrong, watch the Mind Games webinar, because it's very fundamental, it's very basic, and that's what drives the markets. It's all about knowing yourself. But anyway, enough about that. Have a look at the Mind Games webinar. So today it's all about systems, algos, a little bit on algos really, and I'll tell you my thoughts on algos and how difficult they can be, and EAs in general. But so algorithmic trading, discretionary and non-discretionary systems, what that means, and why, the pros and cons of each one. And then what I do, so looking for trades, setting targets, setting stop loss, all very simple to be honest, but I say this all the time, and I'm not going to apologize for it, and I'm going to talk about it again today. It's all about discipline, patience, risk management. Risk management is absolutely vital. Mindset, again, I talk about it all the time, and what good systems look like, what bad systems look like, and how what sort of targets they should have, what sort of parameters they may have, and what makes a good system. So before I get going, does anybody here of you guys out there, do you use a system? Do you use EAs? Do you use robots? Do you use algos? Or how do you pick your trades? So any system traders out there, anybody using algos or robots? 1, 2, 3, no. 5, 6, 7, 8. Okay, manual. No, yes, maybe. Breakout EA. Okay. Yes. No. Yes. Try to. Wrote it myself, but had a coder build it for me. Yes, that was sort of a bit of my approach. My background was a bit like that. No. So lots of no's. I use. Omid, you do make me laugh. Omid wrote here, I use faith and God and my brain. Very good. Right, I'll move on from that comment then. Very good. Okay, obviously questions. Please put your questions in here anytime, or stop me if I'm talking too quickly, because I tend to get very excited about this product and this market. But anyway, so let's go back to basics. This business is all about you, and can you that first question there? Can you accept a loss? If you can't accept losing, go and do something else. Whatever system, whatever algo you've got. Whatever approach you have, you will blame that. You will blame the algo, you'll blame the system, you'll blame everything except yourself. Right. I'm just reading the words basically, but and elaborating on them. So you need a system, you need some discipline, you need some patience. And if you haven't got either of those, work on it. Most of us as human beings are very impatient. It's just the way we're built. Discipline isn't what we're good at. So how do you get discipline? How do you become patient? Well, you just work on it. Just be aware that you need to be better at it. Okay? Principally, it's all about protecting your investment. So capital protection is the key thing. Understanding the basics and understanding the simple numbers of risk management. If you risk 5% to win 2%, you're going to end up emptying your account. If you risk 1% to win 2%, that's good enough. If you're risking 5% to win 10%, that's good enough as well. But you just bear in mind, with margin and leverage, that can soon get eaten away. So be careful. Two key books: The Reminiscences of a Stock Operator and Trading in the Zone. They're free, they're PDF downloads. Google them. If you haven't read them, read them. Absolute fundamental. Reminiscences of a Stock Operator is by far the most important trading book ever written, in my humble opinion, for what it's worth, and it's nearly 100 years old. And that's my point, really. The markets haven't changed. The markets won't change. And I'll show you what I do, how I trade, my approach, and what makes a good and bad system. So a quick run through on what algorithmic trading is. In my view, in my opinion, it's a black box system, and you need very, very high powerful computers to run them. They're very complex, using very, very complex mathematical formulas, models, very, very high speed, millions, literally millions of trades a year. And they're the preserve of the high frequency traders, the HFT or the ultra HFT, the high frequency trading companies. As I say, very fast programs, very, very complex, quick algorithms to create a strategy and generate some sort of return very quickly on very, very small margins, and very, very dependent on strong and powerful statistical techniques. Okay. Because of the input that's required, these PhD students, these very complex statistical and programming and algorithmic techniques, they have huge capital investment because of the computer power, software power, the hardware, and the people, the resources of the people. So they really are the preserves of the big corporations, or the very well capitalized corporations. That's what a true algo trading is. Okay, don't try and compete with them. They will wipe you out. Okay, your little EA that you've written yourself, or you got from a friend, or you paid a few $100s for, or you got free, or even paid a few $1,000s for, they do not compete with these big players. And I'm talking about the big banks and the big high frequency, the preserve of the high frequency trading companies like Citadel and Virtue and Flow Traders and others like that. That's real algorithmic trading, and that's what's driving a lot of the markets now. That's what's driving a lot of the spikes we see, these very wild, volatile moves sometimes. We had one yesterday on cable. It went all the way up to 133.56 for some unknown reason. And again, that would have been one of these algos, one of these high-frequency trading companies generating hundreds and hundreds, thousands and thousands of trades very, very quickly. These big players, these HFT companies and the big and sections of the big banks, the Goldman Sachs and the JP Morgans, they use principally for arbitrage. These are the four key areas, and they use them for other areas, but they particularly use them as arbitraging their existing trades, or they will trade them particularly on not so much on currencies, but certainly on stocks when there's a rebalancing in a particular index. So if they're trading index funds, so for instance, the UK FTSE 100. Oh wait, don't they have? So if they are big banks and hedge funds, don't they have real traders and market analysis? They have a few, very not many traders, Omid, as we would know them, but they're the guys you see sat in front of their computers are more to do with, they're more analysts, but not market analysts or technical analysts. They're more, maths analysts or economics analysts. They're those sorts of guys. They're just monitoring the system, because the system does all the trading. There's no human intervention in it, and I'll come on to that in a minute as well. So for instance, the FTSE 100, it gets rebalanced every quarter, and so do all the major indexes. So the market knows the companies that are going to come in and the companies that are going to go out before the actual day that the switchover takes place. And so these guys can front run these companies. So they'll tend to buy the ones that are going in and sell the ones that are going out. That's it in very simple terms, but it's a bit more complicated than that as well. But that's principally what they're doing, and they're very, very small, very, very tight margins. But because they're doing such a volume of trades very, very quickly in microseconds, it's they find a little bit of profit in each of them. They tend to be also looking for very changes in direction or mean reversion, going back, things that have got overstretched, overbought, oversold, going back to the normal, back to the average. So very much a mean reversion type technique as well. And particularly, as I said, I've already touched on about scalping. These very, very small, less than pips, micro pips sort of moves for these HFT and ultra HFT companies. If you want to know more about it, Flash Boys, Michael Lewis is a great author. He writes makes the financial markets look very, very simple. He's got a background in Wall Street, but he's a great author. And his book he wrote in 2004, Flash Boys, all about IEX, a new exchange that came up to try and not compete with, or level the playing field, or even up the game, they called it, by creating this new exchange that actually put delay in how orders were processed before, from when they were sent from banks or brokers to the actual exchange. And I haven't got time to explain it all here, but it's basically trying to help guys that were being traded against by the big companies on Wall Street and the HFT companies, these big traders here, these Citadels and the Virtue I've talked about, for the ordinary guy. So that's really what Algos is all about. So if you want to know more about Algos, have a look at Flash Boys. It's a great little book, and I'll even Google what Algos are. Now then, much more relevant for us. So that's algo trading, but much more relevant for us as looking at EAs or writing our own system or having a look at our own systems. The thing you got to bear in mind is, as with anything in life, nothing is perfect. No system can be 100% or even 90% perfect. Or if I had $1 for every email or text or SMS message I got about the next latest EA, it's 95% hit rate, or it's got 98% hit rate, or it's nonsense. Okay, free robot, or it's only going to cost you $97. It's nonsense. There isn't such a thing. Okay, so nothing's perfect. There are two types of system, or two types of trade, and systems and traders fall into these. One is discretionary, and these are very, very few and far between. These are the people that trade on intuition. They can look at a chart and see where it's going, see where it's going to go next from what it's done in the past. I've only ever seen one or two successful people do this successfully. I did know one guy back in the early noughties in an investment bank, and he just seemed to feel the market. He was very, very not strange. He was a strange personality, but he had this ability just to look at things and see. He could feel things. As I say, they are very, very few and far between, and most of them burn themselves out very, very quickly or retire. I know he retired in his mid-30s and went off. So I can't remember where he went off, but he went off traveling around the world with his wife, and he just had this very odd character, but an intuition, I call it, a feel for the market. Me and most of us, rely on non-discretionary systems, and the most successful systems are non-discretionary because they're rules based. They take into various other parameters and variables that create the system, and that's what mine does. They take the emotion out of it. They take the human side of it. The discretionary trader sort of thrives on his emotions sometimes because he likes the idea of being right or getting things right. But non-discretionary systems tend to be avoid emotion, take that fear and greed away as much as they can. Back tested. I'm a big question about back testing, but back tested to give confidence, and it's all about consistency and confidence. As with any trading system or any approach, you've got to be confident and system. Omid, you're absolutely right. Omid's putting here, what about Warren Buffett? Oh no, Warren Buffett is way older than 30. Absolutely, but Warren Buffett has his secret. Well, it's not secret, but his approach is he buys. He very rarely sells stuff. He invests heavily, major capital investment, and he holds stuff forever. Basically, and then is the eighth wonder of the world, or the ninth wonder of the world, depends where you are, is compounding, and that's what he does very, very well. And he's become super billionaire way after his retirement age. He's got much richer since he's been in his 60s and his 70s than he ever was in his 40s and his 50s, and certainly in his 30s. Buy and hold, absolutely, Michael. That's right. That's his approach. He's a long-term investor based on the principles of economists he grew up with. But more on that later as well. But as traders or as systems guys, these are the sort of things we want to be looking at. Non-discretionary. That's how I am. When I lost in my early trading career, it was all to do. I was trying to be a bit more like this guy. The institutions trying to guess what was going to happen next. Didn't too much emotion. Too much fear and greed, no confidence, no consistency, and that's really what we're going for. Yes, Apple since 2010. Well, there you go. So, quick story. I'll run through this very, very quickly. For me, I needed a kick up the pants. I was in my mid-30s. I remember the day very, very significantly. It was. I won't bore you with the whole detail, but it was the day that Princess Diana died, and my daughter came upstairs. It was a Sunday morning, and she came upstairs saying, "Daddy, Daddy, there's nothing on the TV. There's no cartoons on. Princess Diana's died." I said, "What do you mean Princess Diana's died?" And it was a Sunday morning. As a family, we were all supposed to go to church that morning. People were coming back for Sunday lunch, and it just didn't happen. We sat on the settee and watched this horrific thing unfold. It was wall-to-wall news on every single channel that was on. And 20 years ago, there wasn't that many channels in the UK, and it was a big sort of. I don't know. It was a big moment for our family. So not so much that it was Princess Diana. It was just that, and obviously she's a princess and very had a very privileged life. But it's the fact she was the same age as my wife and I. She was born in the same year. She had 2 young children at the time. We still got 2 children, and that was the thing that related for me. And it was like, well, you got to do this now. You've talked about this for many years. Just do this now. And that's really got me started in trading 20 years ago. It was quite a milestone day. Anyway, enough of that. So what do I do? What's my system look like? Well, this is how I do it. Okay, this is what I do. Okay, I trade with my cash on principally on the daily time frames. My system also works on 4-hour and the 1-hour intraday system as well. I look at the major forex pairs. So major forex is the 8 major currencies here. Bum, 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 and obviously all those crosses. Now then, obviously the spread on each of these crosses varies quite significantly. Obviously euro dollar is very, very tight compared to the Swiss Aussie, but that's what I do, or Swiss CAD or something like that. But they're the 28 majors. I also look at the 2 oil markets, gold, silver, and copper for commodities, and the indexes. I'll look at the Dow, the S&P, the FTSE, and the DAX. And the US dollar index, and more. I look at the Japanese index as well now. Thank you, Prince. It's not a story. It's actually what happened, and that's why it's so. I remember it so fundamentally. It was just a major sort of milestone in our life, and it was the thing that, you know, write your trading plan. Do this now. Last. So each day I tend to I'll wait till the daily candle's closed. Here server time is midnight, so I tend to be honest, the triggers might happen at the end of the day. More often than not, I'll get in the following morning. I'll get up quite early and look at what's happened overnight. The overnight session for me obviously tends to go sideways, certainly on the Forex markets. And the candles tend to be quite so. So if something's triggered overnight, it's either gone against me a bit or gone with me a bit. I'm not really that much out. So because it's a daily chart, I'm not that much out of the pips when it comes to entering. So I tend to, if I'm up, sometimes I will do it at the close of the day, at midnight. But I tend to do it first thing in the morning. I get up quite early and do that. And then it's on the daily chart, it's very much leave it alone basis. So I'll put it on. I always trade with a stop loss and a take profit. And I preach this all the time. You know, it just takes so much of the emotion away. You've done all your thinking, you've done all your analysis. So where do you think it's going to go? Well, I think it's going to go there. Well, that's where your take profit could be. Why is it going to go there? Because of this, this, and this. Why does the stop loss have to be there? Because it has to be there, and I'll come on to that in a minute where the stop loss has to be. Because that's where the last turn was in the market. Because I tend to be a trend trader, energy-based system, and again I'll come on to that. And although I say leave it alone, more often than not, if I fiddle with something, I'll close it before it's either hit the stop loss or the take profit. I'll end up, out of pocket typically. So certainly on the daily rate, I tend to leave it alone. At the moment, I'm fiddling with the system to see if I get out before it gets to the stop loss, because sometimes the stop losses can be quite a long way away, and the momentum's already gone on the energy that's took me in has already waned, and it's gone back the other direction, and so I'm looking at getting out before it actually hits the stop loss. But I'm just something I'm playing with at the moment. But anyway, and my risk management is absolutely key. So it's all about lot size and risk. So typically on any one trade, I will tend to risk less than 2% of the total capital of that trading account on that particular trade. And then the other way the system works is you tend to get, because it's momentum trading or energy, you'll tend to get, if something triggers, if the yen triggers, it'll make trigger against 5 or 6 of the crosses, not just one. And same, commodities tend to move in sequence, but not always. Sometimes copper moves in the opposite direction to gold and silver, and gold and silver don't always move in unison. Same with the oil pairs, but quite often they do. So it's all about that sort of thing as well, minimizing the risk if you're overexposed to the yen or you're overexposed to all the indices going in one direction. So reduce it that way. And then most of the time there will be 2 targets on it if something triggers, and the plan or the way it approaches that 80% of the risk is taken off if we get to target 2, leaving 20% on to get to target 2. Most trades are taken at the same time. If it's against the trend, I tend to only have one target. Again, I'll come on to that. So whether it's with or against the higher time frame trends. There's a few questions coming here. What technically indicates you incorporating your algo? I'll come on to that in a minute, Frederick. I think it's on the next slide or next couple of slides. So if you're trading the daily time frame, when do you take trade for 4 hour, 1 hour? How many times to look at the charts? Because I understand for the daily time frame, every close of the day you take a trade. Yes. Well, if it triggers and when it'd be the same with and that's it. That's why I talk about patience and discipline. If you're trading the 1 hour time frame, that 1 hour. The activity, the price action hasn't completed until the hour's up, so you should wait until the 1 hour candle is complete. So in each trading day you might get 8 trading hours, okay? Or in each 24 hours you get 6 4-hour candles. So wait, if you're trading those time frames, you wait till those candles are complete before you take any action. What is your trade ratio win lose pips? Babak, I'll show you that in a minute as well. It's on some of the slides here, but we're doing I do okay. Okay. So this is the background to my system. I'm not going to show you exactly what it is because I've spent thousands of pounds putting it together, but I'm happy to explain the basics of it. I'm very much look for energy in markets. I was born in a small village in the northeast of England on the coast, so I like the sea and the waves, and I live here and I'm staring at the sea right now as I'm talking to you. I live on the coast in Larnaca. So the waves for me, I don't trade Elliott waves, but the waves for me in the markets is a similar sort of thing. It's energy, turning points and trends. I'm very much a trend trader. So my system is rules based, it's non-discretionary, except when I fiddle with it. And when I fiddle with it, that's when sometimes I can lose or not make as much profit as I should do. So it's rules based. If the system says go, I will go 9 times out of 10. Even though it doesn't look right or feel right, my bias might be, my bias. If somebody asks me at the moment, what's your bias about the pound, Stuart? I'd say, well, I'd be short the pound, but a few days ago I was long the pound because the system said go. So don't let your internal, little voice, your biases influence your system. If you know your system works, and I do know my system works, and over the long run, whether that's a week, a month, a year, I know I'll come out with money in my pocket, and that's what you got to deal with when you're losing, and also deal with when you're winning as well. Not get too overconfident when everything's going well, or get too down when it's going against you. So it's typically the daily one. But I like the 20-day simple moving average, and I'm looking for a breach and break of it, or sufficient energy here that it looks like it's going to break quite significantly. I like the 14 daily ATR, the 14 period ATR, and again that's a standard default on the MT4, and I'll bring in the MT4 later if we've got, what time is it, 1:30, if we've got time to do that. And that's typically my target. So the take profit will be either the 14-day ATR or a multiple there of it. So if I'm trading off the daily time frame, I'm interested in what the weekly and the monthly is doing. So if the weekly is still in an uptrend and the monthly is an uptrend, that's big tick in the box for me, and I'll tend to use like 1.3 or 1.5 of the ATR for my target. Work what that out is and then see where that comes on a chart, and sometimes it'll be where a Fibonacci level is or a moving average level is, so I'll amend, or it'll be a big round number, so I'll just, it all sort of falls into place, and that's great. Sometimes the weekly might be long. Say I got a trigger on the daily that was short, the weekly might still be long, but the monthly is short as well, so that's good as well, because I prefer the higher time frame is more significant than the lower time frame, so the monthly has more preference over the weekly, so that would still be with the trend. If, for instance, the daily went short and the weekly was long and the monthly was still long, that's very much against the trend. So I'd then look at perhaps trading less than the ATR, 60, 50 pips, something like that. Depends where it would come to. If there's some sort of logical break in the movement, and why is the daily against the higher time frame? Well, sometimes it just does that. Same with any time frames as well. So you could do the same thing. If you're trading off 4 hours, but the 15-minute could be short, whereas the 4 hours long, or the 1 hour's long and the 5 minutes short. You easily do that sort of thing. So and then the intraday one as well, I will tend to take the spread off. So the 4 hour and the 1 hour trades, I will take the spread into account. I don't do that on the daily time frame. Now then, stop loss. The stop loss always just has to be around or close or below the latest high or low, the turning point. So these turning points and energy, the trends, beginning and the end of the trend, that's what I'm looking for. So my stop loss will be typically above a recent move or a recent low or high, and or a cluster of fractals when we look at the chart as well, because I like using fractals as well. So that's typically what my system is. I also like these other things. I do these manually sometimes, but the system, and on the charts you see when we did the live trading on a Tuesday, you see all these things on there usually. So manual support and resistance lines I will draw myself. You'll see them. The Bollinger Bands are standard setting, 20 and 2.5. Well, I'm not trying to say it's 2.5 on my Bollinger Bands. I like Fibonacci retracements. They just fall into place lots and lots of times, and I have fractals on my chart. I also have the parabolic SAR as well, but that's, don't overdo it. And RSI is my key oscillator. I don't use MACD much. I don't use stochastics much. It's just my approach. It's just me. They're all great little systems. Stocks and MACDs are really good oscillators as well. I just tend to stick to the RSI and typically the default settings that come out of the MT4 platform. So that's me, that's my system, and it works for me. Okay, works for my personality, works for the way I trade, but we're all different. Okay, it may not work for you, but typically for November, November hasn't been great, but this is the trades we put up either on the analysis page, on the Facebook page. So we're up 2,000 pips. Don't get too excited about the 2,000 pips. A lot of that was from this one gold trade here. So it hasn't been a great month, to be honest. And the pip count on gold is very high, simply because at Hot Forex we trade at the cent level. I know lots of other brokers trade at the 10-cent level or even the dollar level. I know a couple of brokers in London trade at the dollar level, which is a bit scary. But anyway, so yeah, it's not been great, but it's so if you took that one out, it's still, even if we were trading at the 10-cent level, it's still 100 and odd pips, but we'd be just about break even for the month in November. It's not been great, but that's what happens, ups and downs. It's all about winning and losing and accepting both the same. But overall, since I've been doing this for Hot Forex from March last year, we've had 450 posts, 300 winners and 140 losers. So it's okay. We're doing very well. In fact, let's blow my own trumpet. Just so it works for me, and I have confidence in it, and I don't get down anymore. I don't get overexcited anymore. It's just something that just keeps ticking along. Okay. So any questions? Any more questions, I should say? Babak, I hope that answered your question about win-loss ratio as well. Do you care win-loss ratio? I mean, if the system suggests you trade with... Yes, actually, let me just go back to that. Yes, my system is a bit... from a target to loss rate. Actually, let's just bring in an example, shall we? If I can do that. What was the last one we did? It was yesterday, wasn't it? It was pound something. Because I'm looking for turns, sometimes the risk-reward ratio can be huge, but I typically I like 1, but I will take ratios that are less than 1 as well, and you can do that with Forex. It's much more difficult with other commodities or other currencies or stocks or anything like that. But because I know my system does work for me. I'm trying to find that last trade we did. I can't remember where it is. Actually, it was this one, wasn't it? Oh, actually, let me just bring that up, because I think this was. As well, this is a good. Yes, this is a good example. So hopefully you can all see that. Let's zoom in a bit. This was from literally yesterday. It triggered this one. Can you all see that? This is the pound New Zealand dollar, and why isn't that? That's not. Why does that look like that? That's right. That's in the 4-hour. There you go. Daily looks a bit odd. So this was the. Actually, let's go, but you can't. It's because that yellow line. This wick went all the way down to. Let me just take that yellow line off. Sorry, you can't see that very well. Delete and delete. There we can see now. Right. This was, so let me just bring this. So this was one of my systems trades that triggered. So we're in an uptrend. We've gone up. We come down again. We've broken under the 20. We've got up to this high, and this didn't tick all my boxes. So this hasn't followed all my boxes. Automated scanner, Michael. No, I just scroll through those 40 charts. I have got one that scrolls through it for me, but I do it manually. So the 40 charts I'm looking at, I scroll through them manually quickly, just to see, because I like to do it. I get a better feel for what's either coming up sometimes. I have got an auto scanner that will suddenly, of the 40 I'm scanning, might bring up 5 or 6 or 10 or 11 or something like that, depending on what's going on. Let me just explain why we got in here. So this hasn't fulfilled a lot of the rules, but the system said go, and when it triggered here on the close of on the 27th on the night, I didn't actually enter that trade till the following. This is another one. Yesterday morning I got in here. Here, that was when I was filled at 192.40 when we got in. So, and target 1. worked out the ATR was 100 and something, wasn't it? 171, but target 1 coincided with the middle of the Bollinger Band. Sorry, the middle of the Bollinger Band, so the key 20-day moving average. So the theory was, if that broke, it would keep on going down, and that probably would have happened until we had some big fundamental news yesterday that changed the pound completely. So we got to target 1, I think, during the webinar. And then because it was against the trend, as you can see, this is very much in an uptrend, so this was against the trend, so I very much had a target 1 I was quite comfortable with, but target 2 was only triggered and entered, so I entered target I'm out of words here. I entered to target 2 after target 1 was complete, so whatever that was, I can't remember, that was 90 pips or whatever it was, but overall we took 150 pips out of that in 2 separate trades in the day yesterday. Normally, because normally if it's with the trend, I would have entered both trades then and let them run, and this is a bit of an unusual one because it's ran off in the same day. They don't normally do that, but here we had a big downer on pound yesterday until we had this big announcement about the UK agreeing to give offer the EU £50 million or 55 million euros to sort out the Brexit bill, but that's just what's been gossiped about. It's not actually nothing on the table yet, and Barnier has just come out actually not so long ago to say there's no actual agreement yet, and it's the issue with the Brexit is the Irish border. But anyway, I'm getting off the point here. We're talking about systems today, aren't we? Anyway, so yes, to answer your, who asked about Babak? So to answer your idea about risk reward, that was where my entry was. That was my target, and my stop loss would have been up here. So look at that. That's a really poor risk reward. But I know, and that the way my system has worked over time and over years, this sometimes when they have a big risk reward, because I'm waiting for the turn to complete, they're the ones that can be more successful to actually get to the target, as long as the target isn't too far away. I hope that answered your question, Babak, and I haven't waffled on too much for that. So anyway, yes, I like 1-to-1. I'm happy to take minimum 1-to-1, but as you can see on that one, that was something like, yes, about 5, wasn't it? 0.5 ratio, Babak there. I don't know if you're still here, Babak, but there you go. So system, that's how my system works. It's all about energy, turning points, and I'm very much a trend trader, non-discretionary, a rules-based system. 20-day moving average, I like it to break, and the 14-period ATR on the daily time frame, but also on other time frames as well. So the 14-period ATR, whether you're trading on the 1 hour or the 4 hour, whatever time frame, you can still use as targets and stop loss areas as well. So slides won't move on now. Why won't the slides move on? I showed you that, haven't I? So systems, as I said, there isn't such a thing as a perfect system, and if anybody's trying to sell you one with a 95% hit rate or 98% hit rate or even a 80% hit rate, be very, very careful. Markets are not logical, they're not perfect, and they're certainly they're not perfect, and they're certainly not logical, and there isn't a true market. They do what they do. They're very much emotional based things as well, so don't assume 1 + 1 will always equal 2, because quite often 1 + 1 can equal 3, or 1 + 1 can also equal 1.5, and that's the madness of markets. And don't try and think it out too carefully or too much into it. These discretionary intuition traders are very, very rare, and it's this is non-discretionary systems that work. Good systems, and my system is very, very typical. They've got to understand risk, and that's why I talk about risk management all the time, relentlessly, all the time. It's all about risk. I know my system gives me an edge, but you've got to manage your money. You've got to protect your capital. You've got to understand risk too much, and the market will take it off you very, very quickly. My system, for instance, I'm not a coder. I'm not a computer programmer or anything like that. But the guys that put it together for me, when I look at it, they show me these great big pages of code, and they say, those few lines there, I think there's about 15 lines is actually the trading rules, the 20 period break, the momentum change, all that sort of stuff. There's about 20 lines of that, but the risk bit of it, is about 100 odd lines. So the risk management thing, the lots, the lot size and all that sort of stuff, is very much the nub of the system itself. Okay, and there's all sorts of different approaches. There's lots of books out there. There's lots of traders that write trading manuals about writing systems or having systems done for you, and there's also different types of approaches. And depending on, again, what sort of trader you are, somebody put up, a couple of you put up, you trade EAs with breakout systems. There's many pattern systems, whether these harmonic scanner systems or whatever you want to call them. Many popular mean reverting systems. So something's got a mean reverting system is something that's got overstretched or overbought, and it's going to come back and return to the mean. That's very much a oscillating type approach. Moving average system, mine is perhaps I'd probably call it a moving average system. I like the simple moving averages on the higher time frames and the exponential on the intraday stuff. Mine is very much a moving average system because it's a trend following system, not necessarily trying to find the beginning of a trend or the end of a trend, but just generally get on the trend and take the meat of the move out of that particular trend. And what's probable, is it likely to happen? If it is, it's close enough. It doesn't have to, it's never ever 100%. 60, 65, 70% chance of it happening, it's good enough for me. I'm on that and running with it. And there are all sorts of different systems that work different. Again, there's lots of analysis done by people much cleverer than I am, and these are some of the things they found. You've got to have, if you're writing punters, you've got to have it, and you've got to want it to make a win. You've got to have it winner. Many people say 20%, 30%, but it needs to be a minimum. Apparently, the experts tell us a minimum. It's got to be greater than at least 12%. Anything that's only winning, 10%, 5%, 9% over the long term ends up emptying your pockets. Don't have, again, mine hasn't got very many rules, but don't have too many rules. The more complicated it is, perhaps the cleverer you think it is, or the cleverer the programming is, but often you don't get, you miss out on trades, and it's a bit too complex. Mine is really good across all markets. I've seen many systems that are great, trading gold, or they're great trading oil or shares, but rubbish with forex, or they can't, or it's really good with forex, but it can't deal with the gaps you get on trading shares or indexes. Mine works really well across all markets, which is why I have the spread of the markets that I trade. But most importantly, it's that fourth point there about the risk control. They all have super systems that work, have really strong risk control systems, and even this is far too high for me. My maximum draw is nothing like this. Anything close to 20% can really wipe you out quite quickly, and you've got to have winning nothing really over a 9-month system. I had a friend of mine last year, before Trump came into, he had a complete nightmare of 2016, and he lost every month up to September. October it started to turn round, and with Trump's election he didn't actually end up the year flat, but he was very negative for 9 months of the year. I say October was flat, but November and December and the election of Donald Trump virtually cut his losses quite significantly. So he was out of pocket for 8-9 months of the year, but he knew overall, because he's been doing this much longer than I have, that eventually it would come right, and it sort of did. He did have a losing year last year, but it's again, that's part of the way his system works. And again, they tend to be, the successful ones again tend to be non-discretionary, no intuition, no in manual input, and tend to be mechanically based, totally mechanical what if systems as well, with a little bit of nous. So there you go. That's what I do. That's what good systems look like. I don't know if that's been of any help to anybody, but please, if you're thinking about creating your own systems, or you're evaluating systems that fit with your time frames and your lifestyle, because that's the most important thing as well. All these computer programs, whatever system it is or whatever approach you want to take, it's got to fit with your personality, which is why I spend so much time talking about in the mind games webinar, when I talk so much about knowing yourself, and that's why I always have that that slide right at the beginning. It's all about understanding yourself, because there's no point in developing a system that's going to work brilliantly on or what you think is going to work brilliantly on 5-minute time frames if you haven't got the personality and the ability to let that run, be able to trade all on that sort of short time frames. Or indeed, if you've there's no point in you having a system like mine that runs on the daily time frames. Where's it gone? This one, on these sort of things. If you want to be trading more than that, you want to be doing 5, 6, 7, 10 trades a day, there's no point, you won't have the patience to wait till the end of the day, to wait till the daily candles close. You'll be jumping in early, or you can't wait till the 4-hour or the 1-hour candles close. So have something that works for you. That's by far the most important thing. Okay, so thank you for your time today. I'll call it a short one for a change and only ramble on much longer. Tomorrow, let me just bring in this. Actually, tomorrow's webinars. So I've not got them on my on the spreadsheet here. So tomorrow's webinars are. Here we go. So it's Renko. It's part 2. Renko's a great Ichimoku is a great ancient Japanese approach. Kay will take it to the next level tomorrow. Part 2. You did part 1 last month. Live analysis every Tuesday. Join me. It's my system that generates the trades I do or the approaches I take. Correlations on the 6th when we're talking about what's correlated, what's not correlated. Why does gold go up and the Aussie dollar go down, or vice versa? Or why does the Canadian dollar go up and oil go down? All those sort of things. Scalping, lots of you are very interested in scalping. Kay will go through that. Pivot points. Andrew's got a really good little webinar. She's going to talk about intraday pivot points, 1, 2, and 3 support and resistance levels, and the 13th. Indicator crossover. I'm not sure what that one is on the 14th, to be honest. Alternative strategies on the 20th. That's all about some other types of approaches to either momentum or volume and all those other things. Don't forget, there's lots of indicators out there. Just because some work for me doesn't mean that they're the best. They work for me, they mightn't work for you, or you can't get them to see them. So have a look at. There's lots and lots of indicators out there. Just bear in mind, none of them are ideal. None of them work 100%. Support and resistance, absolutely fundamental on the 21st. Andrew will do a review of the year on the 27th, and then on the 28th, it's all about emotions and controlling those emotions, and then it's 2018. So thank you for your time today. Any final questions before we go? Silence. Okay, well, thank you for your time, everybody. And we'll see you again tomorrow. If you're interested in Ichimoku, do join us. I hope that's been of some use. Please email me, as I said, at webinars@hotforex.com. And we'll see you tomorrow. Okay, thanks, everybody. Bye-bye.